Welcome back to XRP Spotlight, your home for the latest XRP news, crypto market updates, and everything happening in the world of digital assets. XRP holders, buckle up because today we have a lot to talk about. The big question everyone is asking right now is simple. Has it been canceled again? And what does that mean for XRP? The headlines are flying in every direction. Investors are trying to separate facts from rumors, and the markets are reacting to every new development. We are seeing uncertainty surrounding international negotiations, political statements, economic policy, and crypto regulation all collide at the same time. When that happens, volatility follows. Some traders panic, some investors wait, and others see opportunity. Today we're going to break down exactly what's happening, why the market is reacting the way it is, and what XRP holders should be paying attention to over the coming days and weeks. Before we jump in, all I ask is that you give me a big smile, send out those positive vibes, smash that like button, and let's dive right into today's update. The first thing we need to discuss is the ongoing uncertainty surrounding the international situation that has been dominating headlines. Over the last several days, investors have watched negotiations move forward, stall, move forward again, and then suddenly face new complications. One moment the market believes a breakthrough is coming, and the next moment reports emerge suggesting delays, cancellations, or disagreements behind closed doors. That kind of uncertainty creates nervousness across global markets because investors hate not knowing what comes next. When traders cannot predict outcomes, they reduce risk. That affects stocks, commodities, bonds, and of course cryptocurrencies. XRP has not been immune to these swings. Every major geopolitical headline now seems to trigger immediate reactions across digital asset markets. While some investors expected a clear resolution by now, the reality is that negotiations involving multiple governments are rarely simple. The market is trying to price in every possible outcome at once, and that's why we're seeing these sudden moves that leave many investors scratching their heads. One of the biggest concerns right now is how global uncertainty impacts energy markets. Oil prices remain one of the most important factors influencing inflation expectations worldwide. If energy prices remain elevated, inflation pressures can stay higher for longer. If inflation stays high, central banks may be less willing to cut interest rates. And if interest rates stay higher than expected, risk assets often face additional pressure. This is where the connection to XRP becomes important. Crypto markets have historically performed best during periods of abundant liquidity and lower borrowing costs. Investors looking at XRP are not just watching blockchain developments anymore. They're watching oil markets, inflation reports, employment data, and central bank decisions. The crypto market today is far more connected to traditional finance than it was just a few years ago. That means events happening thousands of miles away can directly influence sentiment surrounding XRP and the broader digital asset space. At the same time, despite all the fear and uncertainty, XRP has shown remarkable resilience compared to what many analysts expected. We have seen periods where negative headlines hit the market and XRP experienced temporary weakness, but buyers continue stepping in. That suggests investors are still focused on the bigger picture rather than simply reacting to every headline. Long-term holders understand that short-term volatility is part of the game. Markets rarely move in a straight line. The most important thing to remember is that sentiment can change very quickly. The same market participants who are fearful today can become extremely bullish tomorrow if the right catalyst emerges. That's why experienced investors pay attention to long-term trends rather than getting caught up in every hourly move. XRP continues to remain one of the most closely watched digital assets in the entire crypto industry, and that attention is unlikely to disappear anytime soon. Now let's talk about regulation because this remains one of the biggest drivers of XRP sentiment. Investors continue waiting for greater legal clarity surrounding digital assets in the United States. Every update from lawmakers, regulators, and policymakers is being analyzed by traders looking for clues about the future of crypto. Many market participants believe that clear regulatory frameworks could unlock a wave of institutional participation. Large financial institutions often want certainty before committing significant capital to emerging markets. That certainty has been missing for years. However, progress is being made. Discussions around crypto legislation continue to advance, and many investors believe that the industry is much closer to regulatory clarity today than it was even 12 months ago. For XRP holders, that possibility remains one of the most important long-term catalysts because it could significantly impact adoption, liquidity, and investor confidence moving forward. The reason this matters so much is because institutions are not looking at XRP the same way retail investors do. Retail investors often focus on price. Institutions focus on utility, infrastructure, efficiency, compliance, and scalability. Ripple has spent years building relationships across the financial sector. Whether you're talking about cross-border payments, liquidity solutions, tokenization, or settlement technology, the company continues positioning itself within areas that many experts believe will experience substantial growth during the coming decade. That doesn't guarantee success, but it does explain why XRP remains a major topic of discussion whenever institutional adoption enters the conversation. Investors understand that if blockchain technology becomes a core component of global finance, assets connected to real-world utility may attract significant attention. Another major development attracting attention is the continued growth of stablecoins. Stablecoins are quickly becoming one of the most important sectors within digital assets. Many traditional financial institutions are now exploring stablecoin initiatives because they offer a bridge between conventional banking and blockchain technology. For everyday users, stablecoins provide a familiar experience because they are typically tied to traditional currencies. For institutions, they offer faster settlement, greater efficiency, and reduced friction. As stablecoin adoption grows, it introduces more people to blockchain technology. Once individuals and businesses become comfortable using stablecoins, they often begin exploring the broader digital asset ecosystem. This process could ultimately benefit the entire crypto industry, including XRP, because increased blockchain adoption tends to create more opportunities for related technologies and services. At the same time, investors should not ignore broader market conditions. Economic data remains critically important. Inflation readings, employment numbers, consumer spending reports, and central bank communications all influence investor expectations. Every time policymakers speak, markets attempt to interpret future monetary policy. Will rates stay high? Will cuts arrive sooner than expected? Could inflation accelerate again? These questions matter because liquidity remains one of the strongest drivers of risk assets. When financial conditions loosen, investors typically become more willing to allocate capital toward higher growth opportunities. When conditions tighten, risk appetite often declines. XRP continues to trade within this larger financial environment, meaning macroeconomic developments can influence performance just as much as crypto-specific news. Many investors are also watching market psychology. Fear has dominated sentiment recently, but fear rarely lasts forever. Historically, some of the strongest rallies have occurred when sentiment was extremely negative. That doesn't mean prices immediately move higher every time investors become fearful, but it does highlight the importance of perspective. Markets often bottom when confidence is low and optimism appears difficult to find. Experienced investors understand that emotional extremes frequently create opportunities. While nobody knows exactly when sentiment will shift, it's worth remembering that markets are forward-looking. By the time the news becomes overwhelmingly positive, prices often have already moved significantly. One area generating considerable excitement is tokenization. Financial institutions around the world are increasingly exploring ways to bring traditional assets onto blockchain networks. Tokenized assets have the potential to improve efficiency, accessibility, transparency, and settlement speed. Major banks, asset managers, and financial infrastructure providers are investing resources into this area because they see long-term potential. Tokenization is no longer viewed as a niche experiment. It is becoming a serious discussion among some of the largest players in finance. XRP supporters frequently point to this trend because they believe blockchain networks capable of supporting institutional activity may play important roles in the future financial system. Whether those expectations ultimately prove correct remains to be seen, but the momentum surrounding tokenization is undeniable. Another interesting development involves increasing collaboration between traditional finance and digital assets. Just a few years ago, Many financial institutions openly criticized cryptocurrencies. Today, the conversation has changed dramatically. Banks are launching blockchain initiatives. Asset managers are exploring tokenized products. Payment companies are experimenting with digital asset solutions. Regulators are actively discussing frameworks rather than simply debating whether crypto should exist. This evolution demonstrates how quickly the industry is maturing. For XRP holders, the key takeaway is that adoption often happens gradually before accelerating unexpectedly. Technologies that appear early in their development cycle can sometimes experience rapid growth once infrastructure and regulation begin aligning. Despite all the excitement, risk management remains essential. Markets can move in both directions, and volatility is part of investing. No single headline guarantees higher prices, just as no single setback guarantees long-term failure. Smart investors focus on probabilities rather than certainties. They evaluate information carefully, remain patient, and avoid making emotional decisions based on fear or hype. XRP holders should remember that successful investing often involves surviving uncertainty rather than trying to eliminate it. There will always be unexpected events, surprising announcements, and unpredictable market reactions. The goal is not perfection. The goal is staying informed and maintaining discipline. Looking ahead, the next few weeks could be especially important. Investors will continue monitoring geopolitical developments, economic data releases, regulatory progress, and institutional adoption trends. Any major breakthrough in these areas could influence sentiment across the crypto market. At the same time, unexpected setbacks remain possible. That's why flexibility is important. Markets reward those who can adapt to changing conditions rather than becoming emotionally attached to a single outcome. XRP remains at the center of many important conversations involving payments, regulation, and blockchain adoption, ensuring that it will likely remain one of the most closely watched assets in the industry. What's particularly fascinating is how quickly narratives can change. Just weeks ago, many investors were focused on entirely different concerns. Today, attention has shifted toward international negotiations, inflation expectations, and regulatory developments. Next month, the conversation could look completely different again. Markets are constantly evolving. That's why staying informed matters so much. Investors who understand the bigger picture are often better positioned to navigate volatility than those who react solely to headlines. Every cycle creates new opportunities and new challenges. The key is recognizing which developments are temporary noise and which represent meaningful long-term trends. For XRP specifically, the long-term story continues to revolve around utility, adoption, regulation, and integration with the broader financial system. Short-term price fluctuations will always attract attention, but the bigger question remains whether blockchain technology becomes more deeply embedded within global finance. If that trend continues, assets connected to real-world use cases could benefit from growing demand. While nobody can predict the future with certainty, it is clear that the conversation surrounding XRP today is much larger than simple speculation. It involves infrastructure, payments, liquidity, compliance, and financial innovation on a global scale. As we wrap up today's update, the answer to the question "canceled again?" is not nearly as simple as many headlines suggest. Markets are reacting to uncertainty, changing expectations, and evolving narratives. But beneath the noise, the larger themes driving XRP remain very much alive. Regulatory clarity continues progressing, institutional interest continues growing, tokenization continues expanding, and blockchain adoption continues moving forward. There will be setbacks along the way, there will be moments of frustration, and there will be periods when the market tests investors' patience. But those are often the moments that define entire cycles. Thank you for watching XRP Spotlight. If you enjoyed today's update, make sure to smash that like button, subscribe to the channel, and let me know your thoughts in the comments below. And as always, let's make a lot of money.